I'm Madison Mills. This is Bloomberg Quicktake. The cost of food, energy, and housing surged in November as Americans endured the highest annual inflation since 1982. For U.S. consumers, prices jumped nearly 7% in November from a year ago as inflation intensifies pressure on lower-income households, and especially for those everyday necessities ahead of the holiday season.
So how will this affect wages and those Christmas gift lists and the big ticket purchases that you may have been planning to make all year? We want to welcome back Marcia Mantell from Mantell Investments. She is our personal finance guru. Marcia, inflation has been a constant theme this past year, and the latest numbers are certainly eye-popping. But I wonder how much of it is because we're kind of less attentive to the true price of goods. There are some economists who say that consumers are mainly shocked by rising inflation because we had such a long period of low inflation before the pandemic. So my question to you is, do you think Americans have become too comfortable with just expecting prices to hold at current levels?
I do. I absolutely agree with that comment. And it's easy to get lulled into that, Scarlet and Maddie, because it hasn't been like it's been a year or two that we've had this managed inflation at around 1.5% to 2.5%. It's been since the 80s, since I graduated from high school and college in 1983. We've had this very steady, little bumps here and there, but generally steady, slow increase in prices. And our wages have generally been able to keep up. But all of a sudden, we're getting some pretty snazzy headlines today that this is, very dramatic to have a 6.8% increase in all items from last November to this November. So that's quite substantial. It's not 2%, but it's also not as dramatic as it seems on the surface.
It may not be as dramatic for everyone, but for me, it feels like the most intense financial downfall of my lifetime. Not to be, over dramatic or anything. My family's from Tampa. They have the highest inflation rate in the country. I'm going to be there for the holidays in a few weeks. What's next in terms of when I can expect this to level off, or is this just how it's going to be from now on?
No, Maddie, I appreciate your comments. And as you know, I have girls your age as well. And it is a little shocking, things that you bought 6 months ago are now are noticeably higher. Yeah. Or for the same $100, you cannot fill that grocery bag with as much stuff as you used to. Right. So this is a real thing, especially when food gets involved. The big indicators and the big inflation busters right now are housing, rent, vehicles. Well, if you're not buying a new house, if you're not getting a new apartment and seeing rent increases, and if you're not buying a new car, that wouldn't really matter. But food and gas and fuel oil for those of us who live in the North, you feel it. You see it in your pocketbook. You see that your dollar doesn't stretch so far. But I want to give you a little perspective. Back, I mentioned in the early 80s, late 70s, early 80s, there was a 4-year run of what I would call extreme inflation. I'm talking double digits. Every single month, the year over year numbers moved up 13%, 14, 17, and it went on for 4 years. This doesn't feel the same for us older timers. It really doesn't. That was a particular era where we had all kinds of situations that made for high inflationary situations. What we have today is this real rub, and I know you guys talk about this all the time, the supply and demand. Mm-hmm. Our supply is a lot less when our demand is a lot higher. And that, this is where all boats rise. And in this case, it's with inflation. So what to expect? There's still going to be some bouncing around of costs. Inflation overall, and pretty much the only direction costs go are up. But what we'd like to see is a little steadier, 0.2% per month or 0.5% per month. And that's where I think two things, Maddie. One is that there will still be increases that you're going to feel. Real consumers are really going to feel these prices for a while yet. But I encourage you to look underneath the big headline number. It isn't 6.8 for everything.
Yeah.
And I talk about ice cream. That's one of my favorite foods, and that's one of the items I track. I am happy to report ice cream has not gone up nearly that high.
Oh, thank God.
So what you're going to do is look for good news within the harder to take news. And adjust accordingly.
I'm going to eat less beef and go with ice cream, which I've always wanted to do anyway. But
here's your reason.
Exactly. Marcia, I mean, there will be a lot of finger pointing at the central bank and at the White House. And we know when we had this period of rapid inflation in the late 70s and early 80s, the prescription is to raise interest rates. And that's exactly what Paul Volcker did at the Federal Reserve, to the chagrin of so many people, because it was a hard adjustment. From where you sit, is that the most effective way policymakers and elected officials can fight inflation, or is there another way to slow down the price increase?
That is a great question. I don't have that great policy PhD background in economics, so I'm going to let the economists speak to that. But what I will say is, when prices start to move higher, we also need to see things like wages increasing and the interest rates for our savings accounts to also increase, so that we don't see such a huge disparity between high costs and purchasing power. So rising interest rates, I listened to a few articles this morning and read a few things, that's already on the table. It's going to be interesting to watch over the next few months. And it's hard when inflation has this high a jump at the holiday time, when we're already buying a lot more than maybe we normally do. I think we just all need to take a little bit of a breath, wait until February and March. Let's see where the supply gets bigger, demand settles in, that's not holiday, and see where our numbers end up.
Absolutely. And Maddie, that would be good news for people who have been saving money and don't collect a lot of interest for it if interest rates do start to increase.
That's true. And that was one of my big questions for you, Marcia. For the folks who are getting closer to retirement, I mean, how concerned should they be? And is there any way to kind of game inflation to your benefit?
Oh, isn't that a good question? The best way to kind of bend inflation and make sure that it works for you is to make sure you have a really good investment strategy that has a significant component for growth. So again, all of these factors have to balance each other out. And the more you know that or see that and make sure your investments are aligned to, we always talk about it in the industry as you want to have investments that beat inflation or hedge inflation. Well, we're living it now. It's no longer a concept. So we really need to make sure that we don't get nervous and, sell and make big, bold moves and pendulum swing when that is not a strategy. That's a reaction. So make sure your strategy is really tight and in place. If you have a financial advisor, talk to that financial advisor. Make sure you understand what's going on, because frankly, the market is up. It's gangbusters, right? But now we have some higher inflation. So it's offsetting purchasing power and future purchasing power. So I think we all just need to get a little more connected to how the markets move, and when one of the pistons, moves a little faster than it usually does.
Yeah, absolutely. Marcia, for a country of savers, inflation is bad news, because it devalues what you have there, unless, of course, you can make up for it with rising investments. But for a country with a lot of debt, rising inflation is good because it also devalues the debt. My question to you is, does that same kind of thinking apply to individuals and households? Like, if you have a lot of consumer debt, if you have a lot of credit card debt or student debt, is inflation good news for you?
Well, I think overall, when you have consumer debt, not mortgage is kind of its own category. It is very tough if you're not keeping up with your credit card payments. I mean, the interest rates already are so very high. And where I look at it from that consumer, literally, mom and pop sitting down to pay bills, when inflation is rising and they have to pay more at the grocery store, they have less to pay that credit card outstanding balance. And because the rates on credit cards, for example, are so high, you end up having to elongate and stretch out your payments, therefore paying more. So it's more important to have a good debt approach. If you can, don't get yourself over your skis here with debt. But if you have, really work hard to chip away at that debt. High interest rates, not so good. Having to spend money now at the grocery store instead of paying down debt, not so good.
Yeah.
So it's
Marcia,
double whammy.
Really quickly in our final 30 seconds here, what's your number one biggest tip for dealing with inflation?
Budget. get reacquainted with your budget, ladies. It is really looking hard at where you're spending and where can you make some trade-offs as we go through this bumpy juncture here.
Right. If anything, maybe I can convince myself it's an opportunity to get reacquainted with budgeting again. Marcia, always appreciate speaking with you. Thank you so much for joining us today. That was Marcia Mantell from Mantell Investments.